afternoon, ladies and gentlemen. The time is 12:30, and I'm going to be making an adjustment to my Infosys positional trade, which is why I'm recording before the day is closed. Now, this is a trade that I took as an IV crush trade. I explained this trade in one of the previous videos. Going into the results, as of now, this trade is losing me 32,000. And what has happened? The position is just less than 1% away from the downside break even. Now, this is at the end of the month. So, despite the down move, what has happened? There has been an IV crush in Infosys, which is why the position is actually giving me only 31,000 loss, right? But from here, if you see, there is one thing you have to consider, which is theta to delta risk. Now, most of the time, you want to have a high potential theta and low potential delta risk. What is the problem here? The problem here is the results are not yet out. The results will be out and we'll know only on Monday how Infosys reacts. And there are two issues here. One, Infosys has been selling off for the past couple of days, so it is oversold. So if the results are might lead to some kind of short covering. There are already a lot of shorts in the system. So in case there's a blast, I would think the blast would happen on the upside and not so much on the downside. So if I aggressively adjust to increase my downside break even, in case there's a big upside move, I will get hurt in that. At the same time, if Infosys nothing happens and it continues to stay here, I don't benefit too much, because if you see how this looks, clearly the maximum theta is if Infi is trading here, right? Whereas here there's very little theta, and if there is a breakdown, which I would think is lower probability because it is on a shorter time frame, Infi is definitely oversold. So if there is a breakdown, then I have a risk. So let's say for whatever reason there's a 3% gap, right? So 3% gap, I will be losing 1.66 lakhs. If it opens flat, I won't gain much. Of course, if it gaps up, then I will gain a decent amount. But regardless, it's not as much as what I would gain in case, I mean, my risk of a 3% down move is much higher in terms of P&L versus the benefit that I would get with a 3% up move. So what am I going to do here? First of all, to adjust this, what I'll be doing is I'll be creating a bearish iron condor. So what does that mean? I will sell here the 17,000 call option and 1660 put option. So I want you to first look at this trade on its own, right? So this is first of all a bearish strangle. I am hedging that by buying this put option on the downside, 1600 put option. So my downside risk is there's no downside risk at all as of now. And also I'm buying a hedge on the upside, which is 1900 call option for 10 lots initially. Okay, so for 10 lots. So this is what the trade looks like. But at the same time, in case there is a tremendous up move after this particular trade, if I have this position, I will not make any profit, because then it'll come back to break even. So what I'm doing is these hedges, which have become very cheap, this 2100 call option, which is gone, I purchased at 4 rupees, it has gone to 2 rupees. I am going to buy, I'm going to sell that off and move my hedge to 1900. So there's 18 lots there. I will add another 18 lots here. So what was my previous hedge at, sorry, this has to be made 28. Yeah. So now if you see, first of all, my break even has now increased to 3%, almost 3% from here, rather than what it was previously of just 1% on the downside. My upper break even has come down, but if you see, my upside risk is very little. It's only maximum risk of 1 lakh. Whereas previously, if you see my upside risk, my maximum risk could be all the way up to 7 lakhs on the upside, which is no longer the case anymore. And with this trade, the trade will then look like this, because I want to have a relatively bullish bias on Infi from here. I think it's oversold, but at the same time, and I want to increase the possible theta in this. If you see, the possible theta here is obviously now very clearly much higher. And at the same time, if Infi does go down, let us say it does go 3% down, my risk is going to be lesser also than what it was previously. I would be losing almost 2 lakhs there. And because this is Infi, if there is continued downside risk from here also, I will be able to manage this in a fair manner, is what I would think. As of now, I have one small trade running. So this morning I had taken an intraday trade. I closed it at break even at 10:01. So at 10:01, I squared up my entire position. Then there was a blast in the put side options, complete massive IV expansion. So what I did there around 10:30, I entered this for about 29 rupees. So 17,300 and 17,700. This was available, sorry, for 39 rupees. I thought this was very good. I can have a 2-point stop loss on this position and trail it till the end of the day, because today is one day before the expiry. Despite today being a Tuesday, today is one day before the expiry. As of now, this is trading for around 19, sorry, not 19, 29 rupees. Around 32 rupees is where my trailing exit at this point of time is. So I entered this around 38, about 17,000 sizing. And as of now, it is trading at 29. And if it goes to 32, I will be taking the exit on it. So I have my exit orders ready. So anyway, that we'll see towards the end of the day where it closes. But I was also carrying a double diagonal. This doesn't mean anything. This is showing as though it's making a lot of profit. That's because I had a double diagonal. I booked it in the morning. So we will go here. Yeah, about 2.23 lakhs is what is the running profit on Nifty. And if this basically comes down by 3 points, so if it goes to 190, I will be squaring it off. Also, I guess I will show you how I will execute this trade. So I will trade it through Sensible only. Here I can look at the liquidity, how it is. So let me first get the buy orders to fill. It's always better to get the buy orders to try and fill first. So maybe 9.4. So I can see what is the price that they're selling at. Let me try 9.45. Get it to fill. Okay. All right. So I will sell this for 19. I just need my order to fill quickly. I will play for slippage. I'm aware of that. But it is part and parcel. I don't mind the slippage. I want my orders to fill quickly. So I can now sell this off. Yeah. So all of my orders are executed. I will show you how the position will now look. So apart from that, I had a couple of running trades, which is I sold Bank Nifty call into the up move. This call at one point had gone to 400 rupees. I had sold when we were at 17,500 only into the tremendous up move. This is against my holdings. Now it has come back down completely. At that point, I'd also sold the Bank Nifty 35. This is 150 quantity. Doesn't matter that much, but yeah, this strangle I'm holding positionally. HDFC, what I'd done is created this bullish sort of iron fly at 2,500. And because as we broke the pre-merger news level, I entered this position. As of now, I'm holding it as it is. In case there's more downside risk and we start breaching break even, I will then look at what has to be done here. So that is HDFC. Infi is just literally the position that right now we have made changes to. I will obviously get slippage. If you see my Infi positions, what I've entered today, among them, it will not be looking so. Okay, as of now, not showing that I got much slippage. Yeah, so as of now, this is how the position looks. It has a relatively high potential theta here. It has more downside risk and less upside risk, because I believe as of now, I think it is oversold. And if you look at Infi chart, I would think there should be some kind of demand situation. There has been bad news in Infi also, and that has been basically the biggest factor that's pulling Infi down. As of now, Infi IV continues to remain very high. So if after the results, even if nothing happens, this position should be giving me a fair amount of profit. Apart from that, what other trades am I holding? So what I'm doing now is I'm experimenting partly with putting 3, 4, 5% of my margin into fully hedged kind of trades. And if it's very small, then maybe even unhedged, as is the case with this ITC. ITC had was at an IVP of 90 plus. So that is when, let me go over the life of this trade. This is what I mean by when you have enough margin, you can manage any trade. So I was short the 260 call option at 3 rupees. This rocketed, I think, towards its high. It went as high as 15. What I did was I initially made the 260 a straddle position. And then to that, I also added, thinking that, ITC is overbought, I also added a 270 call option short. That ended up bleeding. So I then converted that position into a straddle position. And yesterday, as we were holding above 270, about half the sizing of this two. So this is four lots of straddles here. I added another straddle where the put is in the money at 280. So regardless of what happens, I mean, now my break even on ITC 250 on the downside, 252 on the downside, and 283 on the upside. Because the IV is so high, I don't mind having a short volatility position here on ITC. And yeah, I mean, the potential risk is also relatively high when the IV is high, but this is a high quality company, it's ITC. So you don't expect it to move drastically. But yes, there is a risk here. Definitely, like if we have a massive gap down, gap up. Regardless, though, if you look at my margin used, I will be able to manage this position eventually. So ITC and yeah, Larsen just sold against my shares. Reliance as well. I had initially sold this 2700 call against my shares. We had made a tremendous up move. This went almost to 60. And then I entered a put short. So now this position is in a profit. Yeah, TCS took a very similar trade to Infi. I entered this yesterday only. The idea is there will be an IV crush once the results are out. That has been the case. For now, position still looks good to hold. So for the next 2-3 days, I will hold this position and then I'll probably trail into an exit. Very similar, the Info explanation I had given, very, very similar to that for TCS. So that's about it. As of now, the intraday trade also looking all right, trading at 28 rupees. So as the day goes on, I will keep trailing. So next trail, I will trail once this goes to 27 rupees. I will trail the stop loss exit to 30 and keep it that way. Yeah, why did I exit my intraday position initially? In the morning, there was just not enough pricing in the put options, and I was expecting them to explode as soon as. So if you see exactly where I exited, I'll show you from the put option chart. So exactly here, right? So if you see, so we had this morning high, and then we had second high, and the third time, just as we were breaching, as this was reaching 30, I took my exit. So just go orders. Yeah, exactly at that price point. So at 29, 30, 30. And this is why it's important to keep your stop losses around these swings, because if most people have shorted it there, once it's taking out the day's high, you don't want to be stuck. Yeah, once it's taking out the day's high, and there's such low pricing of risk. We've made 150 point move from yesterday close to today low, and this only 150 points pricing in the 17500 strangle. At that point, I don't want to enter it. And the reason I re-entered also, and I'll explain my re-entry logic. The reason I re-entered here is because the puts had gained from almost 12 rupees to 20 rupees, and these calls had only lost from 20 rupees to 8 rupees. So I was then expecting that, okay, I can have a very tight risk management here. On the call, I can set a stop loss, which is, let me show you the call option chart. Yeah, here. Okay, so this candle's high, which was 21, was my stop loss on the call when I entered it. Second time when it made a swing here, sorry, 22 was the high. It was close 1 point away from hitting. It didn't hit, and now it has given up. So that puts my position in a good situation. So my idea here is I want to have asymmetric risk reward. I want to have low risk and high reward, and into an IV spike. Took the opportunity to enter with a mild stop loss, and I'm now trailing that. This works only because tomorrow is the expiry. Anyway, that's about it. These are all the positional trades that I'm carrying, and the intraday trade anyway will close today. What my idea with thing now is I want to diversify a little bit, especially I think now is a good time to try that out, because I used to previously trade positionally. I'm very comfortable trading positionally. I used to previously trade almost purely naked. Now I will do it almost purely completely hedged. So by doing that, I can diversify some of, as my margin has been growing in my account, it's very difficult to deploy that efficiently in intraday trading alone. So instead of having that margin sit around, I can take trades which should be manageable. And if you see in any of my positional trades, even if I take the worst case max loss on them, I will not be touching more than 1%, 1.5% of my account value, which is completely fine. That's the worst case risk, right? So that is more or less what's happening. Anyway, thank you so much for watching. I will catch you tomorrow for the expiry. I'll also let you know if I make any changes to these trades. Take care. Have a good one.